A few years ago, we held an event in Sydney, Australia for custom home builders. We regularly hold these events as it gives us a chance to meet builders face to face and just get to know them a bit better. The evening starts out with a few drinks and a bite to eat, followed by a presentation covering what's working now for custom home builders, and then it ends with an opportunity to become a member of the Association of Professional Builders. Now, during the drinks and canapes session, I was chatting to a custom home builder called Nathan, who was pretty well established. He'd been operating for over 3 years and he had grown his revenue to $3 million a year. So he was pretty comfortable with what he had achieved, and he didn't feel that he needed any help at this stage. But nonetheless, he thought he'd come along anyway and just see what the APB was all about. Now, during the presentation, I could see that he was taking plenty of notes. So I felt good that even if he didn't feel membership was right for him at this point, at least he appeared to be getting plenty of value from attending the evening. And as the evening wrapped up, the builders that wanted to join the APB came to us while Nathan and his wife, Karen, slipped out through the back exit. Now, I remember thinking at the time that I'd have liked to have just said goodbye and thanked them both for coming along. So I just made a mental note to reach out the following day to see if the information had resonated with them both. Now, by the time we'd finished signing up all the new members, it was getting pretty late and we were supposed to vacate the room by 8:30, and by that time it was already 9:15. However, as we left the room, I saw Nathan and Karen waiting patiently outside. And when I got out there, he thanked me for inviting him, and he went on to apologize for not being in a position to join the APB. And before I could react, he just laid it all out for me. And he told me that despite bringing in $3 million a year in revenue and adding a 25% margin to their jobs, they had no money. That, things were getting desperate and they just could not figure out where it was all going wrong. Now, Nathan told me that his running costs were only around 10%. And although he was adding 25% margin to his jobs, he reckoned he was probably clearing about 20% after cost overruns and unforeseen items. So in theory, he should have been making $300,000 a year in net profit on top of his wages. Yet every day they face constant cash flow problems trying to keep the jobs moving forward. Now, I could see in his eyes he was desperate for answers. He said, "I'd like to sign up today, but I can't because I'm so tight on cash. I just need to get another job going and then I'll be getting started with you guys." Now, that is a sure sign that a custom home builder is in serious trouble, because chasing revenue to fix a profitability problem rarely ends well. Now, I explained to Nathan that although I couldn't do anything right now, I would organize a meeting with one of our coaches who could take a deep dive into what was happening and just see if we could give him some pointers as to how to fix it. And 2 days later, one of our construction financial experts was analyzing what was happening in Nathan's business in an attempt to figure out how $300,000 in net profit was simply disappearing in a year. Now, the first thing they looked at was the fixed expenses, and at 10.7% of revenue, they looked to be well under the industry benchmark. However, there was no mention of Nathan and Karen's salaries. And when we added their salaries into the fixed expenses, the figure come out to 14.7% of revenue, which is around the industry benchmark. So next, we looked at the gross profit, and that was only showing 14.2% rather than the 20% margin that Nathan was expecting to clear after initially adding a 25% margin and then taking into account those cost blowouts. Now, all up, this resulted in a net loss of $15,000 for the year instead of a $300,000 net profit. So over $300,000 disappearing in 12 months. It was an absolute disaster. Now, there were 3 major problems going on here. The first was the way Nathan was calculating his gross profit. Now, what he was doing was adding 25% to his cost of sales and then treating it as a margin. So on a turnover of 3 million, Nathan believed that he was making $750,000 in gross profit. However, adding 25% to your to your cost of sales is actually a markup. And the margin on a 25% markup is just 20%. So instead of making $750,000 gross profit over the year, he was only ever going to make $600,000, which is $150,000 less than he thought he was actually initially adding. Now, in order to get to a 25% margin, Nathan needed to be marking up his jobs by 33.3%, which is the industry benchmark for new homes. But that wasn't the only problem, because his accounts were clearly showing a 14.2% gross profit margin, which meant Nathan was losing another 5.8% of his profit in cost overruns. And because he wasn't comparing his actual costs with his budgeted costs, he had no idea that those small cost blowouts here and there accounted for $174,000 over the course of a year. Now, the end result was that instead of making $750,000 gross profit from $3 million in revenue, he was only really making $426,000. And that would have been okay if his expenses, as he believed, were around 10% or $300,000. But because he didn't include his salary in his fixed expenses, and instead he followed his accountant's advice to just take the money out and I'll sort it out at year end, which, by the way, still hadn't been done by the time we looked at the accounts 9 months later, Nathan didn't realize that he was actually running at a loss. Now, guys, you must include your salary in your fixed expenses, even if it's just a journal entry in your accounts, because I've seen so many builders run into trouble when they draw on a loan account instead of recording their salary as proper drawings, because they forget to include the number in their budget, which means they think they can sign contracts on a lower margin than is realistically possible. So once we fixed that up and we added in a $80,000 salary for Nathan and his wife Karen, because that's what they were actually drawing in order to live, along with the tax liability and the superannuation payments, the real fixed costs for the company came out at $441,000, which was 14.7% of revenue. Now, when Nathan realized that he was only making 14.2% on his jobs and his building company was costing him 14.7% to run, he got angry with himself for allowing it to happen, angry with his clients for taking advantage, and angry because no one had ever taken the time to explain to him how he should price his jobs. But then he became determined to put things right, determined to charge a fair price for the service he was providing instead of just giving it away for wages. And eventually he became confident, because once he realized how much profit he needed to add to every job in order to create a profitable building company, he started to value himself and his time. And this was the biggest transformation in Nathan. And I've seen it in a lot of other builders as well. Rather than thinking, I won't win this job unless I drop my margin, Nathan started thinking, I don't want to take this job on unless I get my margin, because it's not worth my time and it's not worth the risk. Now, that happened 2.5 years ago, and Nathan is still building custom homes, only now he's generating a net profit of 8.9%. So he's still not quite hitting the benchmark of 10%, but he's confident of reaching 12.5% net within the next 2 years, which on the $5.5 million turnover that he's currently enjoying, that's going to result in a $700,000 net profit for the business on top of the $180,000 that Nathan now pays himself. So, and it's not too bad, is it, for someone that left school at 16?